Continuing the conversation with Ellen Rohr on financial health, this week on BCP. Hey there, Proud Nation, and welcome back to another episode of the Blue Collar Proud Show. It's the show that's all about having and living the blue collar business dream. If you're in the trades, if you're in home service, if you're a contractor out there doing your thing, growing a business, we want to be along for that ride, be a part of your success. My name is Carter Harkins, and with me every single week here is Taylor Hill.
How you doing today?
Good. How's your week going?
Man, I'm telling you, I'm having fun.
Yeah.
I'm in sales world this week.
I know it. Coming back from these conventions, we always have a lot of new opportunities, a lot of chances to talk about digital marketing and our new product, Closing Commander. So
I know.
That's
just
exciting.
Loving it. Yeah. It's good stuff.
So I thought I'd just talk for a minute about Closing Commander, and I'm going to wrap it up at the end of the show just to let people know where to find it. But we just had one of the most exciting things happen.
We did.
We went to market to one of our biggest industries that we work in with our digital marketing company, Spark Marketer, is the chimney sweep industry, the chimney services industry. And it's just a great group of people, and we have a lot of fun. We've got probably 150 clients now in that industry, and so it's just so much fun. And we always go to the national convention. This year it was in Portland, Oregon. And so NCSG, which is the National Chimney Sweep Guild, and just so much fun to see people and get to meet new folks. But this year we went with a new thing, a new product that we've been so excited about getting across the line. We haven't really mentioned it here on the show yet. Yeah. And so I just wanted to make sure that we got a chance to mention it now because we entered it into an Innovation Award contest at NCSG.
Can I say it this time since you get to say it?
Yeah.
We won.
We did. The Pete Luter Innovation Award we won for 2018. It was an honor, and it was the first time that software had ever won.
Yeah. It was awesome.
It was very exciting. So you're probably going, well, what was it? What was the software? So I'll tell you, it's called Closing Commander. And it solves one of the biggest pain points that our clients have been telling us they want us to solve. And so we did it. We figured out a way to solve it, which is this. In home service businesses, the techs are generally the ones in the field, and they're the ones who are selling. And techs are running from job to job to job, and they already wear multiple hats.
Yep.
You know, they're wearing the problem-solving technician hat, the get-it-done technician hat, and then they have to change hats and sell. And here's what we can do for you, and sit down at the kitchen table and go through a sales thing. So following up on sales, right, which is what happens between when you present an estimate to a customer in their home and they tell you, well, I don't know if I want to do that yet. We're about to go on a European vacation. And I won't know for 3 weeks, so can you call me back? Between that moment and all of the other appointments that happen where the tech is wearing the tech hat, they don't have time to follow up.
Yeah.
And so it gets missed. And 45% of all companies don't follow up at all.
None.
95% of companies follow up fewer than 3 times before they stop. But what we know based on statistics is that somewhere around 5, 6, and 7 contacts and touches and follow-ups, that's where the magic really starts to happen. And so much money gets left on the table. Yep. And we decided to automate the process of follow-up and solve that for businesses in the field so that when a customer says, I don't know yet, can I get back with you? You have a follow-up tool to automate that process and hit that customer on a regular basis to just remind them. It's not a high-pressure sales thing at all. It's just, hi, Mrs. Smith, just wanted to see if you're interested in that estimate that we provided to you. If you're ready to go or if you have questions, either way, please email me back and let me know. I'd be happy to talk to you kind of thing. And it works. We're seeing like 23% more open estimates that are closing for people who are using this tool. It's really exciting. We just launched it, and it won a freaking award. We're excited.
So I'm going to do your job. And if you would like to look at it and see what it does, you can find it at closingcommander.com.
Yes.
There you go. See, I too can be an announcer.
This concludes the sales portion of our
show.
Our podcast. Thanks.
We're really excited, though. We really have. But we did not expect that.
Yeah. So we've got a great part 2 today with Ellen Rohr, and that's going to be really good.
So before we get started, though, people who have listened to the show and that know us at all pretty much know that I give you a bad time about numbers.
Yeah.
Because it's not that it's not your thing.
It's just not my thing.
It's just not your thing. So,
I admit it.
But you've heard me harp long enough that I know that if I wasn't around, you would pay attention to the numbers.
Sure.
I mean, I give you sometimes weekly, but definitely monthly breakdowns of where we are, what's going on, all that kind of stuff.
I can read a P&L. I know what a balance sheet looks like.
You can
cash
read
flow
the balance
statements.
sheet.
I've got the knowledge.
You got the knowledge to do it.
I just don't have the want to.
Yeah. So talk a little bit about how you kind of deal with the disconnect about knowing that you need to know this stuff, and how you really handle that personally, because you do know the numbers.
Yeah. So for me, I want to know how to make good financial decisions. Okay. Which means I need certain information available to me in order to feel like I can make that decision. And so I get that information. I get it all the time. I get it, every time we need to make a decision. I know what the financial numbers are. But the thing is, I don't go to the source of that information. I go to you. You're my source,
right?
Because you spend more time in those things, and you have a better gut level sense of and decisiveness, I will say, about what our financial picture looks like and what moves we can make. And I trust that. The reason I trust it is because I've known you for 30 years, and I've watched you make very few missteps in in our financial history as a company and in your own personal finances. So I trust that when I ask you how are we doing, you have a good answer for that. And that it is supported by those three documents, the P&L, the balance sheet, and the cash flow statement. So I know where we are. So there's no real disconnect or like cognitive dissonance for me. I get my information from the same place you get your information. I just get it one step further up the line.
Right.
You get the information, I come to you to get that same information. And that with the P&L and the balance sheet, it gets it done.
But if I wasn't here, you would go.
I know how to
do
it. Yeah, I absolutely know how to do it, and I've done it. It wears me out.
Right.
It absolutely. I like big picture, and getting into the minutia of balancing a checkbook and payroll and those things. It's not my strong suit. I would put that if you were to categorize things on a scale from love it to hate it. The financial bookkeeping part of the business is close to the hated end, as close to the hated end as any normal function of business ever could be for me.
So if I wasn't around, what would you do?
Well, we have a great bookkeeper, and I would trust her, but I would be involved in terms of sitting down with her once or twice a week to kind of see where things are. So I would keep my finger on the pulse a lot closer than I do right now. So I would make time for that. I would absolutely make time for that. There's no other way to be responsible in business as a business owner unless you're making time for those financial, doing the work that needs to be done. Those financial moments, if you will, where you're investing in making sure that you know what the financial health of your business looks like.
So the reason I wanted to ask, you'll laugh at this, because the student is now the master. No, I just want to say that was me just giving Carter a hard time, because he really does now understand, and I think you always have. You just hated it.
Yeah.
But there is hope for people who it's just not their thing. You just have to know that in order to make good decisions, you have to make it your thing a couple times a week.
Yeah. And you need to know where you can go to get good information. And if you're not getting the feedback and good information, you got to know what good information looks like, right? Got to know that you're tracking the right things and that those numbers mean something and that you know what they mean, right? So that's important. And then you've got to be diligent to get that information on a regular basis so that it never gets away from you.
Yeah.
When we talk about in our book, Blue Collar Proud, one of those 10 principles for building a kick-ass business you love is financial health. And most people think, oh, well, you just mean be debt free. Don't ever get into debt. And I'm like, no, it's not my philosophy at all. I think debt is a tool. I think you can use it. I think you got to be doggone careful. And most people don't have the discipline to be, to deal with debt responsibly all the time. And it can bite you. And there's a lot of, negative things about it that you've got to understand. But it's not my philosophy. What I mean by financial health is knowing where you are at every minute. And what we write about in the book is understanding your numbers and having a knowledge of what they are at any given moment, because that's a moving thing. It's a moving target in any business. Things change, cash flow changes, income changes, revenue changes, profit changes. Where are those things? And understanding what is going on can be indicators, lagging indicators, granted, but they can indicate where you need to focus more effort on the operations of your business and what things you can do to capitalize on new opportunities that might be there.
Yeah, I look at it as tools.
Yes. Yep.
It's tools. It's like a hammer, a drill. You get your numbers. They're all tools. That's the way I look at it. Mm-hmm. Cool. Well, let's see what Ellen says.
Yeah, I'm looking forward to part 2 of this conversation that we started last week with Ellen Rohr, talking about financial health. And she brought it right down to basics, some of those things that I was just talking about, but in a probably an even easier to digest and understand way, as only Ellen Rohr can do. So let's continue that conversation now, and afterwards we'll come back and chat.
Awesome.
Ellen Rohr, welcome back again for part 2 of this discussion.
Hey, hey, hey.
I'm curious to know, last time we were talking specifically about balance sheets and cash flow and how to understand some of those things. And we were just starting to really put together what we do with those things and how they help us make better decisions, help us realize the health of our business, and then involving our people, letting them in on some of that information so that they see the health of the business as well. Because once they see it along with you, then it becomes a game. How do we make this better? How do we fix the problems that we have? How do we take this further down the road and actually all win so that we're all making more money and winning together? So let's pick it up where we were and continue that conversation.
Delicious. Isn't that fun? I just loved even hearing the recap. That's what it is. You keep score, you review what you've done, you make a new plan, you change your operating basis, your sales, your marketing, your technical approaches to business, and then you see the effect on the scorecards, the balance sheet, and the profit and loss. And if you really want to fix things, you engage your frontline people because they really know what's wrong with your company. I wish more employers would trust that the people who work with them are on the same team, that they will help you fix your business, because absolutely I found that over and over to be true.
Well, and that makes perfect sense. I mean, you've trusted these people enough to hire them and make them part of your business. You need to trust them to help you build your business and do the things in your business to fix it and move it forward, because most people, when they come to work for you, want to work for you as a career. So if you don't let them help, if they can't help you fix your business and you tank it, they're out. So it's to their benefit to help you fix your business. It just makes logical sense.
And let's look at the whole paradox of that. Suppose they don't work with you forever. Well, you can't, that's outside your hula hoop, right?
That's it.
But what I like to consider is, while someone's on my watch, in the moment we have together, could I impact their life in a powerful, positive way? And then they may stay, but even if they leave, wouldn't I be proud of the adventures that they experience? If they started their own business and they were super successful and you had a piece of helping them do that, wouldn't that make you really, really proud? And for me, the answer is yes, yes, yes. Who knows? You may end up working for them someday.
Yeah, absolutely.
But let's look at this too. When it comes to sharing financial information, your team can help you. They can come up with ideas to increase sales, curtail expenses, all of which are going to improve cash flow. And suppose you do show them the money. I think one of the fears that business owners have is, I might get ripped off. What if they see how much cash I have? What if they see how much I don't have? Is this going to make them want to bail? There's a lot of fear involved in this. What I have found is, when you share financial information with team members, the sky doesn't fall. The bad things that you think might happen don't happen. And bonus, the best thing you can do to ensure you're not getting ripped off is to make sure you don't keep all of the financial information with one person. For instance, suppose it's just you trusting your bookkeeper to do everything right. From my experience, the bookkeeper has been the number one person to rip off the owner, mostly because they run into hard times, a good person does something stupid, and the owner isn't looking. There aren't enough eyes on it. Does that make sense?
Mm-hmm.
Yeah. So very often an owner with this idea that I'm just going to get this one trusted person to do everything when it comes to the financials, that's really the riskiest thing you can do. If you are opening the books and your key team members are looking at the financials every week, a bookkeeper who runs into hard times is going to not rip you off because they're going to get busted.
Yeah.
So it's a safe thing to do too. So let's talk a little bit more about cash flow. I just had this tip jotted down that I want to make sure I mention. When it comes to operating with debt, with debt or no debt, some business owners are comfortable with more debt than others. Some even have a spiritual relationship with debt that causes them to want to be debt free. And so there isn't really a right or wrong way to do this, to incur debt for your company. It can be a very personalized decision. But the bank is going to want to see that you have more in assets than you have in debt. In other words, they're going to want to look at your balance sheet and see that you have X dollar of assets, and the debt can't be more than that, or they're not going to loan you any money. In other words, you have to have assets against which the bank could secure a debt. So if your balance sheet has $100,000 worth of assets and $200,000 worth of liabilities, that means you're upside down on equity $100,000. You're not going to be able to borrow any more money. That's something to fix, because if you ever did need to borrow money, you'd like to be in a position where you could. It's a bit of a paradox because you want to build your company as if you don't need to borrow money, just in case you do. Does that make sense?
Yeah, absolutely.
And the way to fix that is to get very, very profitable, as previously mentioned in our first segment. Another thing to do is to watch what you use your cash for. And this leads me to the tip I wanted to present today, which is the lease versus buy decision. Now, people don't get rich because they lease their vehicles versus buy their vehicles. There isn't one or the other. But one of the things that I am okay doing is leasing vehicles and I'm also okay buying vehicles and incurring a debt to get the vehicle. I never recommend to my clients that they buy their vehicles using cash. If you are the kind of person who doesn't want any kind of debt, you can ignore what I just said. However, the reality is that a vehicle is such a horrible use of cash because the vehicle instantly starts to depreciate. It doesn't become worth more. Mm-hmm. Does this make sense? Mm-hmm. So of all the things that I would not want to spend my cash on in our industry, in the blue collar world, it would be vehicles. And I encourage people to look at good leasing programs because a lease is such a simple accounting transaction. You lease a vehicle, you expense the lease payment every month. You can always have a new vehicle. If you're working with a cool company, they may even have a nice vehicle maintenance program that's all wrapped up in the lease. So you've always got new trucks rolling through your company, and it's easy to budget for that fixed lease amount per truck every month. Comments, questions here? Are you with me?
This is an interesting take. I talked to so many other people that are dead set against leases, and so this is it's good to have a different perspective on that. I like that it's more budgetable. In terms of the way that it fits in terms of assets and liabilities. That changes the equation a little bit, though, doesn't it?
It does, and you have to look at your leases, get your accountant involved. If you're not good at this, get a buddy who is to go truck shopping with you. Like some people, like at Zoom Drain, Jim Crenity is my partner. He has bought hundreds and hundreds of trucks over the years. I would just take him with me, right? Have him look over my leases. Don't try and do this all by yourself. There are some complications. Some leases look like leases, but actually are more like buying a truck, which again is fine, but you do want to read the fine print. What do you have to do when it comes to the end of the lease? How much cash do you have to come up with, etc. If you buy a truck, what happens is this. your asset of the truck goes up. Now you own the truck. With a true lease, you don't. It doesn't even show up on your balance sheet. It's just going to show up on your profit and loss. If you buy a truck, you're going to have the asset of truck go up. And if you finance that truck, you're going to have a corresponding increase in liabilities, that truck loan. So your asset goes up and your liability goes up. But what can be deceptive is when you write the check for that truck every month, the liability goes down and cash goes down, but you don't see that expense on your profit and loss. The transaction doesn't hit your profit and loss. So if you're budgeting and using last year's profit and loss, you might miss this major expense of the truck. Does that make sense?
Yeah, it does.
All right. And the function, I'm going to give this to you, Carter. I'm going to give you an accounting pop quiz. Are you ready?
I'm ready.
Okay. The function by which, let me give this a Taylor, you can play too. Okay.
Okay.
The function by which an asset turns into expense and shows up over on the profit and loss is what? This is kind of a black diamond level accounting question.
You say it again, the process?
The accounting function by which the asset gets over to the profit and loss. You see it on the profit and loss as an expense. There's an accounting transaction that happens that moves that asset over to expense over time. Do you know what it is?
Is it amortization?
It's close. It's depreciation.
Depreciation. Sorry. Yeah. Okay.
No, and amortization and depreciation are exactly the same. This is going to be a nerd fest if you're ready for it. Amortization and depreciation are the same, except for depreciation applies to tangible assets like trucks, and amortization applies to intangible assets like a franchise, a down payment on a franchise fee.
Okay.
The initial franchise fee, or goodwill when you buy a business or something. But very good. So there is some accounting stuff that happens that shows the expense of that truck, but it's usually done by your accountant. It might just be done at the end of the year. It's easy to discount the impact of that truck on the cash flow, on the day-to-day of your business, unless you're paying attention not only to the profit and loss, but also to the balance sheet.
Very good. Now, and again, we keep hitting up against the time, and I want to make sure that.
Oh, I know. It's so fun. And this is so nerdy.
Yeah, well, it's good stuff.
Deep. I hope that wasn't too deep.
No, it's good stuff. But I want to make sure that we touch just quickly on, because of the season that we're in, tax season, I want to make sure that we touch real quickly on some of the points that you brought up before this call regarding just some of the complications in tax law right now and what your recommendations are to business owners around taxes.
Oh yeah, I just had a great interaction with Jim. Jim Crenity is my partner at Zoom Drain, and he's also one of our franchisees. And he and his CPA just went through this side-by-side process of what the new tax laws would mean for his company if he remained as an S corp or if he switched and became a regular corporation. Hey, that's the kind of conversation everybody wants to have with their CPA. That was like the big aha moment for me. And as he showed me these calculations, I thought, wow, I've been doing this a long time, and this is really over my head. There's a lot to it. There are a lot of moments where the calculations are tweaked differently because of regular corporation or S corp status, and now that the tax laws are new. So bottom line is, it's a really great time to sit with your CPA and ask just that question. Do the new tax laws impact me? How do they impact me? And do I have the best corporate structure, or is it time maybe to update or upgrade that? So just a really helpful hint, especially this time of year.
Absolutely. And given the fact that we are under such a radically different tax law that's just come in, so understanding that there are complications now that have never been there before. There's also some simplifications and some things that you may not even be aware of that could benefit your business, and making sure that you have somebody looking out for your best interest is absolutely crucial, I think, at this time.
Yep.
And can I just give a little affirmation too? If you are in the position where you're looking at tax strategy, you're a pretty fortunate person. Acknowledge that you are better off than like 90% of the world in terms of access to options and wealth. And, this is all good news. So you pay your taxes, whatever it is. It's okay if you don't have to slice the salami too thin. Pay your taxes, just make plenty of money so that you can pay Uncle Sam, which is the rent to live in this great country, and still be generous with yourself, with your team members, and with your community. Profits and cash fix just about everything, including a tax burden.
Man, that is so true.
That's good stuff.
Yeah.
Eleanor, you bring it every single time. Thank you so much for being a guest today.
I love you guys. Thanks to the Blue Collar Nation.
We'll talk again soon.
Thanks, Ellen.
Good stuff. And, one of the things that I appreciated most about what she had to say was that the sky, she said this right at the top, the sky doesn't fall in when you share your numbers with your team.
Yeah, exactly.
Right?
Yeah.
And I know that in our business, that's how we run. We're very transparent. Yeah. We let people know our wins, our failures, where we're making money, where we're losing money, how we want to adjust the business so that, those things happen. I want you to talk a little bit about why you feel like that's important, because I followed your lead on that. And we decided to be much more transparent about our finances than I was even comfortable with. But I decided that you had a good reason, and I just kind of walked with you through that. But tell, in your own words, why do you think that transparency in our business, and we're a successful 7-figure business. It's not like we're talking small numbers anymore. Right. But at the time when we started this, we were talking very small numbers.
Little bitty numbers.
Why is that important?
So I think there's this idea that when your team sees how much money you make, that they're going to start demanding raises at every turn because they see the money you make. So when we talk about being transparent, I'm transparent with not just what we're making, but I'm transparent with what we spend too, and where we spend it, and taxes and insurance and all the other stuff that we have as a business that you have to incur. And once they start to understand, it's just not about this big number, this 7-figure number over there. It's about what you have left. And so they also understand that if we have a special project, and Closing Commander was one of those special projects, it cost us a lot of money. I'm not going to say how much. I'm transparent with my team. I'm not going to be transparent on that.
You have a limit.
I have a limit to my transparency, people. But the team knows why we did it. They know how much money we did it for. They know who we partnered with and why. They know the deal. The leadership team knows all of this, and if anybody else asks, we tell them. It's not that I keep everybody. It's not that once a week I get together and say this, but we're very open if people want to know. And so, at the end of last year, we made a lot of money. We didn't make a lot of profit last year because we were reinvesting things. So the team understood where the investment was going, what was at stake, and what the potential return is on that investment, long term. It's not just in the short term, because there's expenses and whatever that have to be in the marketing all and of that. So they understand that, but they can see that if we stay the course and keep on doing what we do and sticking to our mission and to our with our purpose and mission and values and all that there's a trajectory that's going to benefit everybody. Which is another thing that I think I have a problem. This is just me, and there's a lot of owners out there. I know they're going to disagree, and that's okay. We can agree to disagree. So if you want to slam me, you can slam me. I have a major problem with any business that makes the owners or the CEOs that make 400, 500, or 600% more than the people that are doing the work on a day-in-day basis. Do our guys, I don't think anybody in our business that works for us would besmirch the fact that you and I would make the most money because we've taken the most personal risk. Mm-hmm. I think everybody understands that. But they also understand that we care about them and their families. We care about them being able to make enough money to send their kids to college if that's what they want, or trade school or whatever. We care enough that they are able to buy homes, that buy decent cars. I mean, if you listen to Mark Stoner, one of the very first things that he realized is when he went to his business, and this is the chimney sweep company here in Nashville, Ashbusters. He talks about it looked like a used car lot, because it was just full of dented up, banged up.
All his employee cars.
All the employees' cars. And he's like, this is not what I want. And I'm the same way. I want the people that work for us to be not just proud of working for us and proud of doing what they do for our clients, but I want them to be able to thrive in their own lives and be able to provide without feeling like it's hand to mouth. I mean, that's part of being in America, guys, is providing jobs that people can make good livings at. Mm-hmm. And I think anything less than that, if we're just having companies so that we can line our own pockets and not give back to communities and the people that hopefully we care about and love in our businesses. I spend more time here with my employees than I do at home with my wife. So, let's just face it. That's it. So if you're good to them, they're good to you back. So being transparent, why not? Why not be transparent? Yeah. I mean, the other thing about it is you'll be amazed at what they will give you. And I'm not talking about money, but input.
Yeah. Here's the place where I see we're wasting money, or here's an area I think we could, create a new product or whatever.
Yeah. I mean, the leadership team, when we sit down with the P&L on a monthly basis and break that sucker apart, and we've been traveling, so we haven't done it in a couple of months. So that's one of the things on my list to do. But when you start breaking that thing apart and you've got 4 or 5 other eyes looking at it, and they're asking you, well, why did we spend this much there? And what is this about? And what's that? And over here, and you and I are having, or it's mainly me, having to answer.
No, but we're being accountable.
We're being accountable. Mm-hmm. That I'm answering the questions. This is what this is for. That's what we did here. These, this is this is that. And so they get a really good idea. Say, okay, so in order for us to do this every year, this is the cost. Yes. So they understand that, we bring in 7 figures, but what we end up with is not 7 figures.
Right.
And the other thing I think is real important with that is I don't believe in what I call, and I don't know if this is allowed, but I'm going to say it anyway, piddly ass raises. I think there's nothing more disheartening than give somebody a 10 cent or 25 cent raise. If you can't give $1 an hour raise, don't give the raise. That's the least I want to give is $1 an hour. It drives me crazy when people who work at McDonald's or wherever, they get 10 cents an hour and they're supposed to get excited about it. Just do the math. Nobody gets excited about 10 cents an hour. So if you can't give a good raise, don't give it. Do something else for that person. Send them to dinner. Do something else, but don't, that's insulting. So, yeah, that's the way I feel about it.
Yeah, I appreciate that opinion for sure. And I feel the same way. I want to take care of our people absolutely to the best of our ability.
Yeah.
And so much of the stock or the reinvestment that's going on, in our business, and for most businesses in the early days, is so that that investment into your employees can be realized and making the moves that help you provide, become the kind of place that attracts the kind of talent and the kind of employees that you really want working in your business. It's a culture thing. And I think that's really it is being transparent is a core value. It's a cultural core value. And it's something that says, guys, if, and I think employees realize if they're transparent about their finances and we can see that much of what's going on, then we know that they're trustworthy in these other ways.
Yeah.
And we'll admit when there's faults, admit when there's problems, and show us what's going to happen in order to solve those problems. It just becomes it takes everything. It creates an environment where it's no longer us versus them. It's not management and ownership versus employees.
Yeah, we're in it together.
We're in this together.
Yeah.
This is who we are. Our bottom line is a financial number. This is what our company looks like, and you guys are a part of the solution to make that better.
Yeah.
To show us where we need to improve, as well as how we all stand to benefit.
And if you have a great year and you don't think that year's going to be maintained, then give good bonuses. Share. I mean, you can't have a really good business without people. So if you really think that you can create a business and then deprive people, eventually they're going to figure that out.
Yeah.
So,
and then it becomes us versus them.
Yeah, then it's this contentious thing. Mm-hmm. And, one of our core values is together we
blank,
whatever
right?
That is. And that's really important. So we're in this together. So together we win or together we lose. But we're going to do it together. And in order to do that together, we need to be transparent with not just the things we talk about, but with the money.
Yeah.
With what comes in and what goes out and where it goes out, and it lends itself to great input, great innovation, great ideas, and also accountability, which I personally don't like accountability, but I think it's very important to have accountability.
Sure.
So, if somebody says, I'm going to be your accountability buddy, my this is like, no, you're not. But I will be accountable to my team every day.
Good episode for sure. See, finances is not always about finances and numbers.
Not.
It's about culture and it's about people. And
it's about loving your people. Yeah.
All right. Well, I don't have any feedback to announce this particular week. And so if you are interested in leaving us some feedback about the show, we would love to get that feedback so that we can share it with you on the air. I'd be happy to read your comment. Good or bad, I'll read it right here. And so, the best place to go do that is on iTunes.com, or not on iTunes.com, but in the iTunes podcast app. Sorry, that's what it's called. So I'm going
to give you some feedback.
Okay.
All right?
Yeah.
From Elizabeth Guy.
Yeah.
Was reading our book.
Oh, that's right.
Yeah. She gave us some verbal feedback. Do you remember?
I do.
Yeah, and I don't know if she said she would eventually be able to do the thing in Amazon, but she read the book, and she said it was spectacular.
She said she was getting a lot out of
Yes.
it. It was well written and to the point and so spot on in terms of describing what she was experiencing in business. I thought that was great.
Yeah. She told me, she says, absolutely spectacular.
Well, there you go. So we have feedback after all. Yeah. Thank you, Elizabeth Guy, for that. And if you'd like to leave us some feedback, you can do that on the podcast. Just go to the podcasts app or wherever you go for podcasts. But we'd love it if you do it in the podcasts app. Find the reviews and feedback section there and drop us just a quick note. I'll find it and read it on the show, I promise. Also, if you'd like to pick up our book, you can do that at Amazon.com. It's Blue Collar Proud, 10 Principles for Building a Kick-Ass Business You Love. And that is available there both in paperback and the Kindle version. And you can also leave a review for us there. I love it when we get reviews on the book as well. It helps us know that what we're talking about is resonating with you and helping you grow a more successful business. So just to wrap up, I do want to let you know that Closing Commander is now available in it's available for a 14-day free trial. You can find that at closingcommander.com. And sign up there and tell me what you think of it. Tell me if it's doing for you what it's doing for so many other companies that are already using it. Look forward to that feedback from you. And that is it. As always, you can find out about all the other places where you can connect with us by simply going to bcpshow.com/connect. That's going to do it for this episode. As always, Taylor and I want to thank you from our hearts. Thank you for being in our audience and making this show possible. And to all the other people, Aaron Blaze, our technical director, Jessica Wynn, our show coordinator, and Jonathan Sanders, our community manager. Until next time, remember, it takes the same energy to build a business you love as it does to build one that holds you hostage. Why not use your blood, sweat, and tears and build it blue collar proud?
The Blue Collar Proud Show is a production of the Blue Collar Proud Network.